This is Charles Bell with Alaska Business Magazine, and thank you for joining us today for the first ever episode of our brand new Q&A interview series. Today we're talking with Trilogy Metals and their president and CEO, Tony Giardini, as well as Pat Donelly, the vice president of corporate communications. During this interview, we're talking about the mine economics and job opportunities in the Ambler Mining District, as well as what makes them so excited about this project, along with their partnership with NANA Regional Corporation.
What excites us is the high grade nature of deposits. The fact that it's an area that's typically been underexplored, that it is a combination of a variety of different metals, which actually is quite beneficial in terms of giving us opportunities to help fund the development of the area. So those are the key things that we're excited about as we look at the district as a whole. We're very fortunate to have NANA as a partner, and once we sort of see the development of Arctic, NANA will have to make a decision as to whether they want to have a stake in the project directly or have a net profit interest, which would be equivalent to 15%. NANA has a long history in mining. Obviously, Red Dog has been an incredible success with NANA working with Teck Corporation, and Red Dog is now the largest zinc mine in the world. And a lot of the things that we're looking at, whether it's the toll road and the funding of that road, is really an offshoot of how NANA has been looking at responsible mine development in their areas in the past, and has allowed that development of a road to happen with a way, a long-term view to looking at the benefits within the community. So we're very closely aligned with NANA, and our expectation is that we'll be working hand in glove with the community in terms of looking at the development opportunities, and the focus will be not just on the economic return that NANA will receive, but obviously on the employment and procurement opportunities that will exist in the district. And as I've said right from the beginning, we are talking about a district as opposed to one mine. We're looking at many opportunities. So the first step will be getting Arctic up and running, and at a point in time, Ambler will have to make a decision as to whether they want an equity interest in the project or whether they're happy to have a net profit interest, and we'll see where that goes. But we're working very collaboratively with NANA and the community and their shareholders, and we'll continue to do so as we transition into the joint venture.
The estimated capital costs of the road is going to be, anywhere from, $300 million to $400 million, and the capital cost of the Arctic project is probably going to be close to $1 billion. And so that's just going to create hundreds of jobs. And then you got to think about the economic spin-offs in the area. And the nice thing is, these aren't jobs where you need an advanced degree. We need drivers, mechanics, people to build roads, that sort of thing. So these are good, solid jobs that's going to give a real boost to the state of Alaska, and in particular in an area that needs jobs badly. So in the end, it's going to be thousands of jobs for people. And you also got to remember, the Alaska Railway is underutilized. It's not being utilized 100%, and so it's going to add jobs there. And the Port of Alaska is only open 3 days a week, and so we're going to utilize that capacity again, add jobs there. So the nice thing is that we're going to create jobs not just in the borough, but also in Fairbanks and all the way down to Anchorage.
we see ADA as one of the critical partners and partnerships that we'll have. And, ADA's mandate is really to foster economic development in the state of Alaska and look for opportunities to help fund infrastructure that would lead to employment and jobs and, creation of tax revenues ultimately for the state, but also for the residents in Alaska and the shareholders of NANA as an example. So the focus with ADA is really on how do we get a road constructed into the Ambler District and doing it in a way that the cost of that road can be effectively amortized over a reasonable time period. And I had mentioned that the expected life of a road is 50 years, and the economic case for building the road isn't just Arctic. It's about bornite, it's about Sun and Smucker, which are four of the known deposits that are well advanced in the area. So ADA is looking at putting that road in place and putting a toll structure in that would recover that cost over a reasonable time period that would factor in that there's not just going to be one mine, but there's going to be four mines, because on a standalone basis, Arctic has a 12-year mine life as is contemplated, and it wouldn't be able to bear the economic costs of the road on its own. So it's going to need to factor in bornite, is going to need to factor in some of the other opportunities that already exist in the district. So ADA is in the process right now of, we're waiting for the record of decision. We would expect that to come out shortly, as we said. There was an announcement, or actually it's on the ADA website, of an agreement in principle to look at some of initial funding for the next phase of the road development, which is focused on engineering. And so there's going to be some airborne surveys, et cetera, that are going to be run. And we're looking at a very modest initial investment of about $1 million, of which the Ambler Metals would fund half of that, $500,000, and ADA would fund the other 500. So that is an agreement in principle that would, look at a larger commitment down the road. ADA has about $35 million earmarked for engineering associated with the project, and they're looking for some sharing of that engineering expenditures from parties, which is at this point going to be Ambler Metals. And the deposit is extremely high grade. When we look at sort of copper equivalent, it's north of 5%. I think there's 43 million tons of resource there. It's primarily, when you look at the breakdown of the revenue, it's primarily a copper mine, but it has zinc, lead, gold, and silver credits. The economics, based on the pre-feasibility study that was done a few years ago, and this was a Trilogy study, indicate that it has a net present value of $1.4 billion on an after-tax basis, and internal rate of return of 33%. So when you measure that against other deposits, and I encourage anybody who's listening to this presentation to go to our website, and we have a number of presentations on there that show how Trilogy and Arctic compare to other copper deposits that are out there. What you have is a great mix. You've got a very profitable mine because of that high grade, and you've got a low capital intensity. And what that means is that initially we're looking at about $800 million of initial capital, plus there'll be what's called sustaining capital, which will be capital that's spent as a mine is in production. And when you look at the amount of capital that has to be deployed per ton of production, Arctic is on the low end of that scale. And that's an important consideration, because what it means is that that the company and NANA and anyone who's involved will see the actual capital cost recovered quite quickly, and the cash flow then that becomes generated will start to be returned either to shareholders, whether they're Trilogy South 32 shareholders, or NANA and its community and other Aboriginal corporations in the area. So the economics are quite compelling.
Hey, I hope you enjoyed the interview with Trilogy Metals Tony Giardini and Pat Donelly. Visit our website at www.akbizmag.com.